Ladies and gentlemen, we are live. Welcome to Trades by Bren. We're day trading the SP 500. Let's get this party started. All right, got my beats going. I hope you're doing well wherever you're streaming in from. We're gonna day trade the SP 500. I'm gonna show you how I warm up. How you start your session is extremely important. And you'll see to the right side of my screen, I've got my checklist, okay? So you need a checklist, in my opinion, and this is what keeps me consistent. So I do my AM rituals, meditation, sauna, cold plunge, exercise, coffee, Wim Hof breath work, a whole bunch of stuff. Whatever you do to get your energy up and wake your ass up early in the morning. And then I've got my other little things that I run through here, which are technical. So first I create my BDA. This is before, during, and after. This is my journaling process, and I'm gonna be journaling before, during, and after. So that's this. The second thing I'm gonna do is draw lines, okay? So first, draw the most important lines on the chart, which are gonna be yesterday's high or low, whichever is closest, okay? I like to draw both, but high of yesterday, we just call it HOY, okay? So that's step number one. This is applying to any chart, okay? And just for the record, if you go in TradingView to trading, okay, and you go to events and you turn on session breaks, do you see the dotted line on my screen? See the dotted line on my screen? That shows you the days open, okay? So any chart you can turn those on, and I highly recommend that because it helps you kind of make sense of all these bars on the chart. You've got all this data, so how do you actually make sense of it? Well, you have to start making some distinctions, right? And drawing lines are basically the number one way that we do that, okay? So the high of yesterday's there. Let's draw the low of yesterday. Range day yesterday, really interesting day yesterday. I'm pretty sure this was the Jerome Powell speaking that shot us up, but as you can see, we retraced that whole move down. Really good day for traders if you know how to trade that. So that's like the first thing I do, right? High and low of day, okay? So we've got that now. Low of yesterday, okay. So that's how we rocking with it. Think about it. We'll get to the rest of it in a second here. Let's pull up the chat. It's early in the morning. We're getting things going. This is Trades by Bren. Hope you're doing well wherever you are in the world. Let me check my levels, make sure we're sounding good. All right, levels sounding good. So what do we see on the chart? What do you see? What do you see when you look at this chart? Yesterday, we had a gap up open. That's that gap right there, okay? So the first thing I do is draw the lines. High of yesterday, low of yesterday. Item number one. Second thing I do is I note the gap, if there's a gap. We've got a gap. That means where the market closed yesterday here and where the market opened, there's a gap, okay? So what is that? That's buying. If we switch to the electronic trading hours, you'll see it. Look at that, big move up, okay? We can just see that that's what's been happening there, okay? And know that this is a big bull breakout and we've been bullish. Easiest way to tell just basically what the market's doing, look at the moving average. If we switch to the electronic trading hours, ask yourself, are there more bars above or below the average price? Average price is that blue line, the 21 period moving average. Look, pretty much all the bars are above the blue line, so that means we're bullish. If it was the opposite, it'd be bearish, okay? So that's important. Note the difference. Now, we have this big gap up and we're in an overall trading range. Why do I say that? Because look, we were up here and then we went down and then we stayed inside this range, then we came down again, now we're up. So that's trading range price action. And also, if you kind of tilt your head to the side and we switch to the daily chart, this is a 5-minute time frame. Check this out. 5-minute time frame. This is a daily time frame. 5 minutes. So every bar on the chart is 5 minutes. Every bar on this chart is 1 day. Now look, can you see the pattern? If you tilt your head to the side, that we're kind of in that channel pattern. Do you see that? Maybe if I go like this, you could see it a little easier. Okay. So you can kind of see that, right? That little channel, right? It's kind of the same sort of pattern. So you see it. Now, I pointed out yesterday that when we're in a channel pattern, I call it a ping pong pattern because you could draw your channel lines, these parallel lines, and then we just kind of ping pong around a lot inside the channel, and very often we'll come up to test the top of the channel like this, and then we'll move down, okay? And you can see that sometimes we're testing the moving average, and sometimes we're testing the bottom of the channel, okay? But that's what happens a lot. You go up, test the top, go down, go back up, go back down again, go back up, go towards the middle, back to the top. So it's a lot of this ping pong, and you got a lot of reversals, but overall, the direction is up, okay? So that's what we want to note, is that we are bullish, and also there's a lot of reversals, okay? So what I want you to do is post in the chat what city you represent. Make sure that you're checking in with us and following the chat room rules. Make sure to post the chat room rules. And we're gonna trade the SP 500 as soon as we see a good entry. I'm waiting for something solid. I'm tempted to buy here, right? Because I see one of my setups, which is a higher low double bottom. Let me point it out, higher low double bottom. Sorry, that's a lower high double bottom. Okay, lower high. Okay. So why do I say that? Because this is higher than this. Okay. That means we went down and we pushed up. We went down and we pushed up. And we are bullish. Okay. So this is a pullback of this. This is a pullback of this, right? So we went up. That's that gap. And then we pulled back, and we found support where? Right here at the high of yesterday. So that's why one of the first things I do is I draw the high of yesterday or the low of yesterday, both, ideally, whichever is closer, okay? So next on the checklist, this is what we're doing when we get in, is we're making the bear and the bull case, and we're practicing counter logic, okay? So that's what we want to do now. So right now I'm saying, okay, that's a potential buy, right? Because I've got a bounce here at support. However, okay, bear and bull case, counter logic. Okay, we have to be able to understand both sides. And if you only think of one side, which is your bias, that's confirmation bias, and that's not good. That's a really good way to lose money, is to only see one argument, okay? You have to be able to argue both sides, and if you argue both sides and then what you think true still stands, now we're talking, baby. That's what we like, okay? So the reason why this is not interesting to me yet, okay, is because of the bear case. Look at the prior high over here. So we're inside this range, okay? And the bear sold off here, okay? So I think we just gotta wait and watch, okay? Plus, another reason why this is not interesting to me yet, okay, is overlap and tails, okay? Signs of trading range, price action, tails, lots of tails, okay? Lots of tails above and below bars. What else? Lots of overlap. Lots of overlapping bars, okay? So that means these are signs that the market is possibly in a range, likely in a range, okay? And if we look here at the daily chart, we are ranging. All of this is a range, okay? So this here is a trading range. Why? Because we went up and we went down, okay? So higher time frame, we are moving up, but that's on a very big time frame. That's on a daily perspective, right? So we're looking for a trade on a 5-minute chart. So we have to actually look at the most recent bars, which would be right here. And the most recent bars right here, we're going sideways. This is sideways price action. CRPA, trading range price action, means sideways, okay? So what's gonna happen when we get here? Well, look what happened last time we reached a high like that. We sold off, okay? So are we gonna come up and then go sideways again? And are we gonna have what happened here similar to here, right? I think that's possible. I mean, if you see a pattern and then you see the same sort of thing and there's nothing really new or different about what you're seeing, you can expect the same thing. Now, what's different about this versus this is, well, this is a lot bigger, right? However, look at the right. 6 hours and 48 minutes left on this candle. 6 hours and 48 minutes left on this candle because it's a daily chart. So we don't know what this bar is going to look like 2 hours from now, 3 hours from now, 4 hours from now, let alone 6 hours from now, right? So we got to wait. There's just things we don't know and we need more data. So this looks like a long to me, but we're just going to wait and watch, and we're not going to rush it. I rushed it a little bit yesterday and it would have been better to wait. So that was a little reminder to me. And what you're seeing on the right-hand side of your screen, are my notes, okay? So these are things that I'm noting as I'm trading, and I'm noting the time, okay? So these are observations. So what I'm seeing is lower high double bottom. Let's turn the bar counter on as well. Big shout out to everybody in the chat room. We've got my man Anthony from Missouri. What's up, dude? Shout out to you. We've got my man Aquino back again. Great to see you again. Thanks for coming back. And we've got my man Val representing California, baby. I love it. All right, I'm in San Diego, so California represent. So important to take some notes while you're trading, and you'll forget. You'll forget shit. Okay, so take notes while you're trading, and it'll really help your learning process. And I like to note the time, and ideally, I like to put a screenshot if I can. Okay, so lower high double bottom. Possible long entry on 5. On bar 5. Okay. And if you guys want to get the same indicator I'm using on my chart, you can get the same indicator on your chart if you would care to. Just go to TradingView and go up to indicators, right? And search bar count and Brooks EMA, and you'll get this one, okay? You can set it up in a similar way or however you want. But that's how I get the bar counter, and that's how I get my moving averages. Okay, so I thought this was a potential long. So far, this is correct because we made another double bottom. So we've got a lower high double bottom here and here, right? So that's what that is. Okay. And then now we have a higher low double bottom. So we might as well just say, okay, this is a higher low double bottom. Okay. And see it right there. Okay. Because that high is higher, because that low rather is higher than this low. Okay. So if you were looking for a long, there's a possible long entry, and right there you've got, let's see. If you wait for the candle to close, put your stop below that low. Right. Decent trade there, 10 points. And will we get there? Yeah, I think we will, but we'll see. It looks like we will. Bear breakout, or bull breakout rather. Breaking above this high. Okay, so that's good. Closing near its high, so that's a good long. And if I were holding right now, I'd be holding, because because I think we're probably going to come up and test this line. This is the high from March 4th, okay? Every trade is a trade-off. So down here you had lower probability because it wasn't clear exactly that we were going higher. Now you have higher probability here. Right here you have higher probability because we just broke a new high. That's a new high, right? And this bar closed above this bar, which is why I like it, right? I like that because it closed above this candle right here. Right about it, but still, that shows bullishness. It shows confidence on the bull. That's evidence, okay? So I like that. But what do you get? What do you have to give up in exchange for higher probability? Once it's more clear, once it's more obvious, you've got to wait for that to happen. So now instead of a 9-point stop, or 10, yeah, it's about a 10-point stop. Instead of a 10-point stop, instead of risking 10 points, now we've got to risk 15 points, okay? So we basically paid 5 points to get extra certainty, right? And that's the case on every trade. There's a trade-off on every trade. Every trade is a trade-off, okay? And you're trading something for something, okay? And there's probability, there's risk, and there's reward. Those are the three pieces to trade structure. To the trade, they call that the trader's equation. Al Brooks calls that the trader's equation. Probability, risk, reward. So you've got risk, which is your stop. You've got reward, which is your profit target. And you've got probability, which is how good of a setup that is. How clear and obvious a setup you've got. If it's clearly moving in the direction that you want, that's higher probability. So what are you going to give up for that higher probability? Or would you rather take less risks and have lower probability? If that's the case, you enter here. It's always a trade-off. Trading, there's always a trade-off. Great to remember that. I wish someone explained that to me when I was starting. Oh man, Aquino's reminding us to be patient. Yes, Aquino, great reminder, dude. We gotta be patient. Patience, my second favorite P word. Good morning. Okay, let's get the chat room rules going. Well, either way, it's a good reminder, dude. Be patient. Be patient. Be disciplined. Two great qualities. Sometimes you gotta pull the trigger. Remember that one too. Chat room rules. Two. Good vibes only. Number 3. Support each other. Chat room rules. I think but this was a potential long down here. Since then, we've gone 8 points, 9 points. Okay, I think we're coming up to test that high. Why? Because I'm some market wizard? Because I'm some genius? No, because it's the closest high, right? Look, we went to the high yesterday. What's the next high? Well, there wasn't one here. Next one's here. Okay, so I think we're coming up to test this. These support lines, or these resistance lines rather, this is a resistance line. They're like magnets. They're like magnets. So that's the thing you want to keep in mind. How does a magnet operate? It has a magnetic attraction. It has a magnetic attraction, just like the cool kids in high school. Magnetic attraction, right? You can't stay away. You just find yourself being pulled in. Who doesn't want to hang out with the cool kids, right? I wasn't one of the cool kids. I was not one of the cool kids. I wanted to be one of the cool kids, but I was not one of the cool kids. I tried to be one of the cool kids, but I wasn't one of the cool kids. Okay, so let's switch to a higher time frame. This is a 5-minute chart, this is a 15-minute chart. So if you're looking for a move up, this is good. This is good. So this is good for the bulls. It's not super strong, but why is this not great? Because it's a doji, there's a tail on the top and the bottom, but still pretty good, right? So we've got a basic channel pattern forming, similar to the daily chart, right? Remember, channel pattern, right? Remember I called it ping pong pattern or zigzag? So same kind of thing, right? If we actually stretch this out, you can kind of see how similar they look, right? See how this looks like this, right? Same kind of pattern. Life is beautiful. Feeling grateful this morning. Grateful to be alive. Grateful to be clicking buttons. Grateful to be clicking buttons, making money. Grateful to be hanging out with you guys. Also, another reason why this is not super interesting to me is how high we are above the moving average. So, we're 15 points above the moving average. Now, often when there's a gap up, right, the price is going to come back and test the moving average. Now, the price did try and do that, but it bounced and found support right at the high of yesterday. So that's very similar to what happened on the open yesterday. Look at yesterday and look at today. Very similar. We've got a gap up open, right? We've got a pullback to the moving average, and then we've got to move up. Okay, so look at this. Similar, right? We've got a gap up open. We've got a pullback. Instead of to the moving average, we just got a pullback to the high of yesterday, and we've got to move up. So pretty similar. But you start to see tails on top of bars like that, and you see little dojis, and to me that shows signs of the trend weakening. So we're still continuing bullish, right? But this does not look strong to me. And if we are in a trading range overall, right? This is trading range overall. Down, going up, going down, going up. This is what it looks like on a higher time frame. Going down, going up, going down, going up. Then I'm less interested, right? If we're in trading range price action, I'm less interested in buying high. This would be high. Why? Because now we're 15.5 points above the moving average. So I want to see how the price reacts. I want to see how the price reacts to this high once we get there. If we do get there, which I think we will. But yes, technically we're trending up. Let's have a look at Bitcoin. Trading range price action. Okay, so similar. Trading range price action, right? Big down, big up. Moving average looks like it's holding support, okay? But once the bears get a crack of the moving average like that, that's some damage. However, this was the all-time high, and you can see big, this is profit taking as far as I can see, because look, if the bulls have been riding this up, and then as soon as we get up to that all-time high, yeah, it makes sense that traders will take profits at the all-time high. But then look what happened. They bought again and shot the price up. So the best the bears could do on this chart was 2 bars below the moving average. We call those gap bars. We call those moving average gap bars, MA gap bars. And there's 2, okay? And look, they're not very strong, right? In fact, the strongest one of these is actually a bull bar, okay? So while this looks like a blow to the bulls, it actually, to me, is a sign of strength, because the bulls came right back and showed their hand right here, right? So we're just ranging, 2-sided trading, and that's not too different than what's been happening here, right? We're ranging. So ranging with the bullish bias. That's pretty much what we're seeing. Now, we've got consecutive bull bars, still trying to make it to that high. So will we hit this high and keep going? Maybe. But probably not. That's what I want to see. Okay. Big shout out to Anthony. It's a beautiful day with some great music and a great teacher. Oh, Anthony, thank you so much, man. I appreciate you being here. And we're gonna count our blessings. You gotta count your blessings, guys. I mean, to be alive is the greatest blessing of all. Not everybody could say that. Not everyone woke up this morning. So sometimes you gotta count your blessings and be like, wow, 1, 2, 3, 4, 5. Wow, there's a lot, okay? So let's keep that in mind while we do this, play this really fun game called trading. Let's just keep in mind that, you know, it's a privilege to be able to do this. Not everybody can. And how grateful I am for YouTube to be able to create this technology. It's so rad. I'm literally just sitting here at my desk and I click a button and boom, there you are. It's amazing. It's so cool. And we got people from all over the world. All right. Life is beautiful. We're trading. Waiting for a trade. Waiting for a good trade. I'm gonna put a marker here for a long entry, because there's your long entry. And then here's your long entry again. All right. So those are your longs. As we've been saying, coming up to test that higher high, March 4th. So let's say you took this trade, 9.5 point stop. Let's say you go for 1-to-1 risk to reward. There's your 10 points right there, right? About 10 points off, 10 point trade. Flat. If you're holding for, if you're willing to be a little more patient, maybe we go for 15, right? And why not? Consecutive bull bars. Here's one way that I've made trade management really easy. It's not easy, but here's a way that I made it easier. If I'm long and I see bull bars, right? Meaning evidence to support my position, I'm holding. So that's one simplified way of doing it. Another bull bar closing on its side, showing you strong conviction from the bulls. This is strong conviction from the bulls. Tight channel. Check out the line. Draw the line, and then draw the parallel. When you guys see a sharp, steep slope like this, see that? That's called a tight channel. There's tight channels and there's broad channels. If you see a channel like this, where it's super narrow, narrow is another way of saying it, right? Narrow or tight. That's a strong channel, okay? But keep in mind, we are in this overall trading range, okay? So if you were trading yesterday, later in the day, you had a tight channel right here. Check this out. Similar pattern, right? Tight channel, tight channel. Similar, right? And then look what happened here. Woo! This bar was crazy. I was actually trading when this happened. 20 points. The market dropped 20 points in 5 minutes. That's nuts. So for something like this, on the open, when there's trading range price action, and we're high, right? Like we're 15 points above the moving average. One thing you can do is trail your stop. So let's say you entered here, and then the market moved in your favor here. Give it a little time to work, but then, you know, you can trail your stop to break even here, which I don't like to do too often, but it would be reasonable, right? You trail your stop here, and then you get another close. You trail your stop to about a point below. Keep your stop about a point below each bar, right? And if you were to do that, you actually would not have gotten the stop down there, right? Because your stop would be here. So the price would have come one tick from your stop. And notice what's happening right now. Do you see what's happening? As soon as we touch that line, you see how we bounce like that? That means there's buyers there. And why are there buyers there? Because this is a tight channel. Because traders are seeing what we're seeing, right? And when there's a tight channel, that means it's trend. If it's trend, that means it's moving in a direction. And if it's moving in a direction, when it pulls back to that trend line, this will be the bottom of the channel. Often traders will buy the first pullback. Okay? Happen here, and it's likely to happen here again. Although, we could get this, right? Remember, we could get that. So we'll see. There is always uncertainty. And in trading, we're swimming in a sea of uncertainty. Swimming in a sea of uncertainty. Constant uncertainty. If you knew everything and you had complete information, trading would be easy, but it's not. Trading is difficult, and that's why it's difficult. That's what makes it difficult, is because you have to go off incomplete information always. And you gotta risk something, man. To risk it. To get the biscuit. You gotta risk it to get the biscuit. Okay, so exactly what we've been saying. First pullback, right? Wouldn't necessarily call this the first pullback because that trend line wasn't exactly formed and we hadn't broken above the high. So we can consider this the first pullback. Often in a tight channel, traders will buy the first pullback to the bottom of the channel. So another strategy is to put as soon as that line forms, to have an order ready to go right here, right? So that'd be another possible long entry. So Anthony's asking what I'm waiting for. Anthony, I'm waiting to see what happens when the price comes in to this support, this resistance zone. That's what I'm waiting for. Support and resistance lines is a misconception. It's a support and resistance area. So I'm looking for what happens in this area, right? And there's a couple possibilities. We just rip through, right? Another possibility is we bounce, okay? And then I'd say the most likely possibility is we come up, we come down, then we come back up again, and then we reverse down, forming a double top. But we'll see. Life is good, baby. Ow! Come on, I gotta get my dance on, man. I gotta get my dance on, man. Let's raise this standing down. Moving up. Too much sitting, not good. Ooh. All right. Thursday, March 7th. Waiting and watching. Speed is so hot. Let me know if you guys are trading. Are you guys trading? Or you just watching? Question from Makino. I trade to one chart and one chart only. So yes, the index. SP500 futures. My philosophy is master one chart. Get really, really good at that. Then look at other shit. And I'm a work in progress, baby. So counter logic, high and low of yesterday, bear and bull case counter logic. So we covered all our bases. Love this beat. 4 and 5. Higher low double bottom 4 and 5. Emotions, calm, perceived awareness, slight loss aversion, present. What else? Exercising. Counter logic. Well. Decisions. Being very selective on entries. If there's one recommendation that I have, it's the trade journaling. You can copy mine if you want. I'm happy to have you do that. And then when we're done, we do the AAR, after action report. So we'll do another check-in. Let's do another check-in in 10 minutes. So it'll be 7:50. Next check-in, 7:50. All right, my man Aquino, I'm on the charts. I've had a look at the E-mini, but I'm mostly just observing. Past price action, taking notes. Yeah, good. Take your time with that back testing, super important. Okay, so exactly what we said might happen here, happened here. We found buyers at that trend line, bottom of that channel, super common. Just like I was pointing out on the daily chart, right? It's just like what happened here, look, same thing, right? We found bars, right? Look, look at the line. Touch that line, bounced up. So same thing that happened here on the 5-minute, same thing happening here. You see that? We touch the line, there's buyers at the line, and we move up. And what that tells you is that traders are using these trend lines. So let's see what happens as we come into this resistance area. Yeah, that's all-time high. Aquino says, I've been trading for a while, lost motivation, but always come back. Came back with clear mental clarity. I know what I need to do to become profitable. I just need to put in the work. Amazing. What did you discover? Question for you. What did you discover that you needed to do to become profitable? Another long entry, another bull breakout. You see that? So one of the things I look for is how does the other side react, right? Obviously, you get 1, 2, 3, 4 consecutive bull bars. So the bulls are strong here, right? But I want to see how the bulls react to a bear bar. That's what I want to see. So if we've got a bear bar here, what happens after that? That's called follow through. So do the bears get a second bear bar, right? Like here, right? They got 1, then they got 2. Here, they only got 1. And then the bulls bought again. And then we want to see where the bar closes. Closed on a tie, okay? So that's why the bulls are buying this, because this is a buy signal. Why? Because it shows you that the bulls are stronger than the bears. We're always looking for an edge, and that shows you an edge, a clear edge. So there's your 15 points. Honestly, what a beautiful trade. What an absolutely beautiful trade. That's about as perfect as it gets, guys. That's about as perfect as it gets. You buy here, possibly add on here, maybe add on here again, take profits here. Beautiful trade. Works out in, what's that whole time? 50 minutes? Absolutely beautiful trade. Okay, so Aquino says, I've always been decent with analysis, but when it comes to actually trading it, at times my psychology gets in the way, but mostly isn't a problem as I've come to terms with losing money. But you know, yeah, I do, trust me. Have you read the book, The Mental Game of Trading by Jared Tendler? New YouTuber name. New YouTube name. Dude, he calls himself new YouTube name. Well done. Thank you. And then also look at the risk profile, 1.4 to 1, right? But what's your actual risk? Because if you entered here, your risk, well, your risk was actually only here. Okay, so that's, your actual risk was there, right? So that's a 3 to 1 trade. 3 to 1 risk to reward. Imagine, you risk 5, you get 15. That's a beautiful, beautiful trade. So I recommend to Aquino and anyone that has trouble with trading psychology, which is everyone, okay, everyone. I recommend to anyone dealing with trading psychology issues to read The Mental Game of Trading by Jared Tendler. That is my mentor. I've worked with him closely for over a year, and I was able to break through my biggest trading psychology issues. Massively helpful. He's also got a community that you can join and get monthly coaching sessions. Extremely valuable. The guy's fantastic. Okay, so as I said earlier, I'm looking for what happens at this area. Okay, so it's a misconception to think that it's a line, and as soon as we break that line, then automatically you can just assume. We don't want to do that. So we want to wait and see how the price reacts to this area. So far, we closed above it and we closed strongly above it. So let's see if that continues. Let's see if the bulls can get followed through here above this high. 4 minutes left on the candle. Let us know where you're streaming in from. Check the chat room rules. And not just up in your city upon entry. Positive vibes only. Support each other. 3 great rules. Why? Because we're building a community, that's why. Aquino, you're welcome. That is a must read. I played this beat the other day. Someone said stripper beats. Stripper music. I'm like, yeah, kinda. I love this beat though. Bathroom break. Okay. So, I was saying, I want to see how the price reacts to this area, right? And I was saying, common misconception about support and resistance, that it's a line. And as soon as you crack support, as soon as you crack resistance, resistance turns into support or vice versa. What you can see right here is the market's deciding if we want to turn down or not, okay? So, market's turning down. And that's what you're seeing. I'm gonna look at the ATR. ATR's 4. And I'm gonna set my profit target for 4. Assuming we get swept in. 2 minutes left on the candle, no rush. Risking 35 to make 40. See how that goes. And we'll either get in there or we won't. Let's extend this line a little bit. Minute 52 on the candle. Moving average, 15 points above, makes sense that there will be some profit taking or some kind of sell-off or reversal, right? Might be minor, we don't know. But the bear's selling most of this, right? Switch to a shorter time frame. Let's look at the 2-minute chart, and you can see 2 consecutive bear bars, right? So that says that looks like we're going to move down. See that? Both bear bars closing on their low. Testing the bottom of the channel again. Strong sell signal. Will the bulls buy it or will the bears get the push down? We'll see.
The reason I said information overload in that thing is because, like, we're in this age of, like, consuming, everybody's consuming shit.
So did not get that entry. So we can choose to move that and to move that order there. All right. But this could be a trap. Two possibilities. One, this is the start of a move down. Very strong sell signal. So reasonable. But even if it is, often we'll come back up to test that high, form a double top, and then get the move down. Right? So that's a possibility. Another possibility is this is actually a trap. And what do I mean by a trap? Well, this is a strong bear bar closing on its low, right? That may attract some sellers, but that could be a trap, trapping bears, and the bulls actually use that to buy and push the price up. Okay, so a little market manipulation there. Looks like that's what's happening. And for that reason, we're going to cancel that order. And reconsider what we want to do here. Two-minute chart. You can see bears coming down to test the moving average on the 2-minute. And then getting trend resumption here. Let's not get ahead of ourselves. Easy to get analysis paralysis. Let's actually leave that just for reference. Leave that here. Yeah. Hugging that March 4th high. That's why we call those magnets. Indecision here, buying and selling. That's why you can see the tail on the top and the bottom. Pullback. One of the things you want to look for is 50% pullback. So notice you pull back exactly 50% of that bear bar. And then bear selling again at 50%, but not enough of them to really cause strong follow through, right? What's question coming in the chat? Make sure you're following the chat room rules. Check the pinned comment. I got the chat room rules in there. Happy to answer your questions if you're following the chat room rules. If not, trend continuation failing, bear selling, at least trying to, performance on the candle. Will they come back down and test this? Or is this a failed buy signal for, is this a failed buy signal for trend continuation? And will we get a move down? I think we will get a move down. That's a failed buy signal. buy signal fails. Weak signal, signal fails. But let's see. Another possibility is this is a trading range, right? Which would mean you want to buy down here. Tight trading range though, not a great situation. And also this whole thing could be a trading range, which I think it is, right? That's why I just wasn't interested in this over here. So if this is the trading range, then selling here would be good because we'd be selling high in a trading range, which is exactly what you want. Alex P, my man. Good morning from Tampa. Thank you for joining us again. Happy to see you, man. So Alex P, beautiful long entry here, 15-point trade, 3-to-1 risk to reward. So initially, and the way I would manage this is I'd put my stop here, and then once the trade goes my way, I'd put my stop here, right? Making that about 3-to-1. You can even trail that stop. Simple trade, high low double bottom, gap up, pull back to the high of yesterday, buy signal, get long, simple, textbook. Almost a perfect setup right there. The only problem is that we were, 12, 15 points above the moving average, but there's always something wrong with every setup. Just about. Okay, so at this point, I'm likely to think that this is the trading range. This is the trading range here. Right, and we're gonna go sideways here at the high of March 4th. Which would mean a long, because we'd be at the bottom of the trading range here. Right. 1-to-1 will put you here. ATR at 4. Bull's trying to get a retest of that high. Let's see if we get filled. Okay, so it's going to be one of two things here. There's buyers down here, and we're going to stay in this range, right? Potentially trying to get that move up. Here, scalp, right? You can even bring this back a little bit. Or the bears are going to get a move down. We're going in with a small position size, so if the bears get that test of the moving average, which I think is likely, we're risking 3.2 points, no big deal. And we've got a 1-to-1, a little better than 1-to-1 on that. Shout out to Santa Barbara. And what, I feel ridiculous calling you new name YouTube, dude. So what's your name? Or what would you like to be called? We are in profit, but let's not get ahead of ourselves. Let's not get too excited. This is a trading range, as far as we can tell. So expect a lot of reversals, expect disappointment. Disappointment how trading range price action works. Right? We never really move too far in one direction or the other. So good to just be patient and keep your expectations out. Minute left on the candle. Usually what'll happen is we'll come back and test the most recent lows. But this is what I meant by it's expecting disappointment, right? So what we want is we want to move up. If this is a bull bar, if this closes white, that's a good sign. But super indecisive, very weak, right? So we can expect buying as much as we can expect selling here. It's pretty neutral, right? Look at that bar body, it's nothing. So it's possible the bulls buy here, seeing failed follow through from the bears, right? Notice 19, the bar body on 19, and then notice the bar body on 20. But there's no sign yet of the bulls buy. So just going sideways, and that's kind of how it goes. It's like you get a little to one side, you get a little to the other, but mostly it's disappointing and indecisive. And you get a lot of reversals like this. Okay, so the bear's getting the push down. So I'd rather take the stop out on this Wait till we get to that moving average and then reassess. Okay, so I thought the trading range was here, the bottom. Could be right here. Looks like there's buyers there, as you can see. It just doesn't look like enough to give the bulls any kind of confidence, right? So. LSP, no, I'm not. I thought that was yesterday. Wasn't that yesterday? Minute 34 on the candle. Yeah, just watch how the price reacts, Alex. Watch the chart, see how the price reacts. Okay, so price came down here, bounced up. 59 seconds on this candle. If the bulls fail again, if the bulls fail to get this close again, it just means more sideways. And reminding myself and everyone here, we can usually expect 15, minimum 15 bars sideways if you trend on the open, which is what happened. We trended on the open, so now we're going sideways. And usually you can expect that to last for about 15 bars. It's about an hour, right? So 20 seconds on this candle, and a very, very weak downtrend. Five seconds left. Entering this area again where the bulls bought. Let's see if the bulls buy again. It doesn't look like they will because now we have 3 consecutive bear bars, right? Again, bears trying to get a test of that moving average, which is likely. It's always tempting to just manually exit out, but you know, if I did that, we got 1 point or 1 tick from it, yes, like down here, right? So I'd just rather I'd rather set my stop and let the chips fall where they may. Over time, I find it just better to do that because you really just tick by tick can't really predict what's going to happen, especially in a trading range. And if the bears were getting bars closing on their lows, that would make this more bearish, but doesn't seem to be the case. This is where the bears have been holding, right right here, right in the middle of this trading range. If I scalp, I like to give it 4 or 5 bars to get filled, right? So
Purchase your track today.
I think we entered here or here. The good news is when you go in with small size, it's just less emotional, less of an issue, one way or the other, which is kind of what you want. You want to be neutral. Market wants to go lower. I think we're going to get a test of that moving average. But coming down to the bottom of this trading range, right where the bulls keep buying right here. Notice they bought down here, they bought down here, and they bought down here. And they're buying down here again. And in a trading range, what you often have is you have the market go one tick below and then bounce up. And that's what makes a trading range different than a trend, right? At the edges, you get reversals. And those are failed breakouts. Super indecisive. So if we're correct and that this is the bottom of the trading range, then we can expect to see some sort of reversal. But the bulls are just struggling. There's really no, look, since we entered, there's been no buying really at all. I mean, some, right? That's why you see the tails, but support down here, but no bullishness yet. One of the hardest things to practice in trading is set your stop and your profit target and just let the chart do what it's going to do. That is the highest confidence thing, because then you're betting on your strategy and your ability to execute it, and you're just trusting that the probabilities will do what they do, right? So sometimes I'll practice things for my psychology. Even if on a particular trade that involves taking a loss, if you look at your performance and you ask yourself, do I learn more from winning or losing? Really powerful question. Think about those days when you had like all winning trades, or it was just happy times. How much did you learn? I'm betting it's not a lot. I'm betting those weren't your days of deepest reflection and analysis on your habits and your discipline, right? I'd be willing to bet that your biggest lessons were from your losses. So in that sense, there's no losing, really. In that sense, there's no losing. You win it or you learn. Loss, win. If you lose, you get a lesson. That's a win. If you lose, you get a lesson, and that's a win. Okay. A minute 18. Market as flat as it could possibly be. Hope you're doing well. Let us know where you're streaming in from. We are day trading the SP 500. Finally getting the push up. Patience pays. Put it in the chat. Patience pays. Patience pays. Put it in the chat. Bull's trying to get a test of that 3-4 high. ready to get out of this one, break even. So what you have in a trading range is a lot of reversals, right? Ping pong's a good way of putting it. Just a lot of pinging and a lot of ponging. And there was a good example of having an idea and then adjusting, right? Having an idea being a little bit off, right? Seeing more data and then adjusting. So I thought the trading range was like around here, right? So I bought down here, okay? Expecting a retest to this 3-4 high, right? Then we got another push down, this candle, okay? So then I go, okay, maybe the trading range is here, right? And then I just had my stop below here, okay? And what did I do? Just waited, right? And the price came 2 ticks from my stop. The price came 1 tick from my, price came 3 ticks from my top, 2 ticks from my stop, and then 1 tick from my stop, right? And I was just like, you know what? I'm just gonna wait and see. And then we bounced up, right? And then you see this big bull bar, you think, okay, we're gonna get more of a move up. But what happens in a trading range is disappointment, often. That's always what happens. Not always, but it's just the characteristics of trading range price action is, like, here's another example. You see this, right? You see this, this is a sell signal at the top of a channel, right? Near a resistance area. It's like good context for a short, okay? And then what happened? We just went sideways. Okay, that's called disappointment. Here, you got all these attempts down, and then you finally got to push up, which looks like we were going to get more up. But then look, as soon as this bar closed, we sold off, right? So what I did is I just adjusted. I said, okay, trading range down here, and then I'm willing to get out break even. No harm, no foul. So that was actually a good example of, you know, taking an entry that was imperfect, and you have to expect yourself to take imperfect entries. You know, it's really not about getting the perfect entry. It's more about how do you manage it, right? So that was a win for trading psychology, because when the trade goes against you and continues to like creep towards that, it continues to creep towards that stop loss. You know, you can become fearful and try and just like manually exit, hit that eject button. But that's something I've really been working on, because it doesn't really work out. You have to just execute consistently according to your rules and procedures. That's your job. Your job is to execute your process and your strategy consistently according to your rules and procedures. So even on a trade like that, right, you can still do well or prevent damage if you manage it well. And that's just emotions. That's just handling the emotions, right? So let's note that we said we're going to check in at 7:50. It's 8:30. And guys, I strongly recommend adopting a journaling process. This will give you some ideas before, during, and after the session, okay? Got long at bottom of tight trading range. Bar, what, 20, 21, something like that. Tempted to panic, but did not. Strong mental, strong mind, emotion management. Satisfied. Perceived awareness. Mental game strategy. Active and working. If you guys want to know what any of this stuff means, or if it's unclear, just let me know. I can explain. Decisions. Just be patient. Or a clear setup and entry. So that's my decision. Do you guys have a journaling process? If yes, let me know in the chat.
AG.
Trello for journaling. Nice. Do you journal? When do you journal? Before, during, or after? Let's get rid of that. Another possibility is you could get short when you see that and hold for some type of measurement, right? You hold for that. We might get there. We'll probably get there. That's a long time to wait though through all this. Second cell signal there. Right? Second cell signal here. And then also double top. Double top. Double top. Lower high double top. Yeah, TradeZilla, I'm familiar. I think I've used it. Yeah, I did test it a while back. It's awesome. But automated journaling is not sufficient. I prefer to screen record my trades. Then I have the recording, I can go back. And it's not a simulated replay. Because what that doesn't show you is it doesn't show you the actions you took, right? If you're monkeying with your stop loss, if you're monkeying with your profit target, which are all things that are actually more important to watch than just your entry. Trade management is really where the game is won. As you can see on that last trade. Right, I could have easily fucked that up. But I did not. How about that? Yay! He didn't fuck it up! Yay! Sometimes you gotta pat yourself on the back. Now we're buying at the bottom of a trading range. for a scalp. Reasonable. Something like that. See if we get it. Decide how much we want to risk. Premise there is that the bulls will buy its first touch. Buying, first touch of the moving average, reasonable. Life is beautiful. Strong buying at the moving average. Let's see how the candle closes up.
For us to go farther. You know, every time I speak, I want the truth to come out. You know what I'm saying? Every time I speak, I want to shiver. I'm not saying I'm going to rule the world or I'm going to change the world, but I guarantee that I will spark the brain that will change the world.
See if the bulls buy that. Decent long entry. After 3 pushes down, 1, I guess it's 2. You can draw the wedge like that. Wedge bottom. Wedge bottom. First test of the moving average. Bulls bought. Now what we're gonna watch for here is if the bulls get followed through. Check the chart. If I go like this, okay? Tell me if you see consecutive bars from the bulls. No, right? For the last hour, we've been super sideways. Slight slight downside bias, right? Like slowly creeping down, but that's about as sideways as it gets, right? So now we're going to see if the character starts to change because we bounced off the moving average. So makes sense that the bulls will buy. And then they got a decent buy signal. Not great, but good. Good, not great. Since this is strongly bullish, rather, and there's all this territory that the bulls own, it makes sense that the bulls will get follow through. So that's why that's a reasonable buy setup for trend continuation. And also, we waited for the market to go sideways about, you know, ideally, we wait. Okay, it started going sideways there. If we count the 15 bars from here, if we say started going sideways here, because this was the bottom of the trading range, why? Because here, right? There was the bottom of the trading range. So that means you could say the trading range started here. And if that's the case, we're right at 15 bars. So, great rule of thumb. If the market trends on the open, expect it to go sideways for 15 bars. We've met that criteria, which makes this a reasonable long. However, why I don't like this is because we're in this trading range, right? So yes, the bulls may come up and retest that, but you know, now we're approaching all-time highs, right? So I would need to see like some strong conviction from the bulls for me to feel comfortable entering long. Reasonable entry, so we'll probably go a few points higher at least. We might go a lot of points higher. Guys, just a reminder, I will be enforcing the chat room rules at all times. Without exception. Zero exceptions in my chat room, okay? Bulls failing to get followed through here, which means this is also now a potential short setup. But looks like bulls are buying, which sometimes that throws me off, because what you have there is, let's think this through. Sometimes the bulls get, or bulls or bears, right? Sometimes you get followed through, a delayed follow through, and that can throw me, because if you enter and then you see the market go sideways, you're like, oh, disappointed. But sometimes you get the follow through on the next bar, right? Sometimes it comes 2 bars later, actually. But if this buy signal looked better, right? If this was stronger, and then if we got, you know, strong follow through, I'm back to bullish here, but looks like we're still in this trading range. Yeah, still in this trading range. 337 on the candle. Hard to say, but this is why I said, hey, be patient, wait for a clear setup. Six. Bulls looking weak. Life is good. That discipline, man. I think if you're a beginner and you're thirsty, you think waiting and being selective is whack, right? Because if you're a noob, if you're a young guy, you're like, I want to participate, I want to participate, I want to participate. It's like a horny teenager. New traders treat the market like horny teenagers. It's a funny analogy, but it's true. Beginner traders treat the market like a horny teenager. And hey, I've been there. In both cases. I know, right? Beginner, I'm gonna use that. Beginner traders treat the market like beginner traders treat the market like a horny teenager. So true. Yeah, so like a noob, right? Just so you guys know, this guy came in to the chat just now and he said, "Do you even trade, bro?" I'm like, I posted the rules. Look at rule number 2. Positive vibes only, no exceptions. So he got booted. When I say no exceptions, I mean no exceptions. Not only did he get booted, he got banned. Booted and banned. There's way too many places on the internet for negativity. Way too many places, right? The internet is filled with an endless amount of negativity. This will not be one of them. Mark my words. We're going to maintain an energy of positivity, support, encouragement, inspiration. And that's it. And that's just how it's going to go. But yeah, someone like that, he's like, hey, what the hell is going on here? Nothing happening, right? Nothing happening. It's like, what the hell? Like, he's like, you know, the horny teenager's like, hey man, I wanna have some action, man. Amateur. Bye. It doesn't piss me off, but it just shows me how amateur that is. It just reminds me how amateur that is. And how much, I forget who it was. Was it Alex P who said this? A few days ago, he's like, we get paid to wait. Imagine that. Imagine thinking about it like that. Like, oh, we get paid to wait. Yeah, pretty much. Whether you're waiting for a good trade or you're in a trade and waiting for it to get filled. Waiting for your profit target to get hit. We get paid to wait. Bitcoin holding above the moving average. Wow. I've got this position on Shopify. And yes, I did say I trade to one chart only, but occasionally I'll take, I'll those to me are more like investments than trades. I guess technically they're longer swing trades, but I bought real close to the bottom. I saw this after all this and going sideways, and then we were holding above the moving average. So I got in right around here. That's a great trade right there. Do you even trade, bro? That guy gets the donkey of the day. Did you guys see that in the chat, or was I the only one that saw it? I don't know how close you guys are watching the chat, but I'm curious if you saw that. Motherfucker came in here talking shit. I had to let him know. Okay, so let's have a look at Financial Juice. You guys use Financial Juice? Pal testified at 7. Biden speaking later. And then Fed's Mester speaks at 8. Oh, already spoke at 8:30. Okay. This red candle doesn't even look like it closed. Yeah, it closed right at the open of 15. That's why I don't like that. If this candle closed like down here, that would have made that a better sell. And then also, I think there would have been more selling here. Ryan Vera, what's going on? Thank you for joining us, Ryan. Welcome to the chat. Please check the chat room rules. They will be upheld, which means we need to know where you're from, man. Let us know who you're representing. Aquino, it's not suspicious. This is how price action is, a lot. In fact, you know, I would take the opposite attitude. If it's moving a lot, that would make me suspicious. But this is how the charts are a lot. It's sideways, 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 right? Okay, so there you go as a second buy. Second buy. You're risking 6 points. Right. Shout out to Texas. Ryan, thanks for joining us from Texas. Big up to Texas. I'm always amazed at how quickly the market can move like that. You know, I do not think it's different than FX. I think the same patterns and the same price action is happening on all charts, all instruments, all time frames. It's buying and selling psychology. It's what buyers and sellers are thinking. Look at that. Okay, so buy signal here, buy signal here. If you bought here, you gotta wait. You get followed through here. I was just saying this. Remember I was saying this? I was like, okay, sometimes you don't get followed through on the next bar. Sometimes it's a delayed follow through. And I was like, sometimes we gotta wait 2 bars. So there's a perfect example. Great buy signal, bounce off the moving average. Why? Because look, bullish. Okay, strong bull trend. First touch on the moving average, what do you expect? More buy. Why? Because traders see this and they go, why? Because there's traders on the sidelines during this. There's traders on the sidelines during this, waiting for a pullback. You ever see that? Market go in a direction, you wait for a pullback to enter. So that's what's happening there. First touch of the moving average, pulls back. Classic. A lot of good entries today. Great entry here. Pretty good, right? Great entry here. Bad entry here. Did not close below this candle, making this a bad entry. But great entry here. Bounce off the moving average. Classic. Second buy signal. Add on here. Aquino, I'd be suspicious why you find it suspicious. Agreed. Yeah, but if you're in my chat room, I'm going to challenge you to grow. I'm going to challenge your thinking so you can refine it and make it better and better. That's how we get better, is through challenge. We grow through challenge. And trading is a thinking game. It's a game of psychology. So that means you got to challenge your thinking if you want to grow in trading. And always something you can learn. You and me, both. Always something you can discover. Always something you can understand better. Guys, I'm going to reset my monitor here just a second. Perfect. Fix it. That's a lot of not taking out all-time highs. 785 days. Question from Kevin. Kevin, check the chat room rules. We gotta know where you're streaming in from. Kevin from Tacoma, Washington. Nice. Shout out to Tacoma, Washington, man. Kevin, thank you for being here. Appreciate you participating. I'm using TradingView. Link in the description if you want a nice little discount. And for my broker, I'll either use TradeStation or TopStep. Okay. And I've got those linked up as well. Washington, baby. Johan, welcome back, my brother. Thanks for being here. Nice to see you again. Life is good, baby. How are you? Kevin, you're welcome. Kevin, are you beginner, intermediate, or advanced trader? Or neither? Okay, so bull channel. Bull channel. Just like the daily chart. Daily chart. Kevin just started. Nice. Cynthia's getting ready to trade. Awesome. Kevin, that's exactly what happened to me. The only thing I tell you is be careful. There's a lot to learn, my man. And that getting hooked thing can be a real issue. So you got to learn how to manage that. That's advice I wish someone gave me when I was starting out. Getting hooked. You got to manage that. That can become a serious issue. Yeah, exactly. You guys know about the I'm blanking. I'll show you some. I got some for that. Dunning-Kruger effect. You guys heard about the Dunning-Kruger effect? Give this a look. This is called beginner's luck. Right here. Right here. This is what I wish someone showed me when I was starting out, getting hooked as a beginner. Here's another one. That's the peak amount, stupid. If you're a new trader, study this very closely. Study this very closely if you're a new trader. Print this out, put this on your computer screen. I did a video of this on my channel called "She Learned Trading in 2 Days." And I comment on this girl's video that says she learned trading in 2 days. She then goes on to say that she didn't learn trading in 2 days and admits that she's lying, essentially. But yeah, that's why they call it the peak amount stupid, because like guru status is down here, right? At the end. But when you're up here, you think you're a guru. Then this is rough. This valley of despair. Oh man. Rough. Rough. That's why beginner's luck is dangerous. It's also good though. I wouldn't say it's all bad. But if you don't understand this, oh man, that drop can be painful. And that happened to me. So that's why I'm sharing it with you. Hopefully I can save you guys some pain. Really rough. It was very painful. I lost a lot of sleep. My health suffered. Like, it was one of the roughest periods I've ever experienced. And it really affected my confidence in a very serious way. And I needed therapy. And it took quite some time to pull myself out of that. That was really painful. So that's why I share this with you guys. Now, I don't know if telling you that will make a difference. But if there's any chance that you can suffer less than I did by me sharing this with you, at least that's what I hope. Trading can take you in pretty quickly. Yeah, exactly. So that's why I share this Dunning-Kruger effect with you. It's probably the most powerful thing I've learned as far as like really how to understand what's happening. And as they say, when you find yourself in hell, what's it saying? Help me out, guys. What's it saying? When you find yourself in hell, you know the quote, right? Keep going. When you find yourself in hell, keep going. That's how the saying goes. Or take a break. Right? Might be good. Might be a good idea too. That's why I can't stand these gurus that try to make it sound easy. I want to smack them. Try to make it sound easy. Ugh. Makes me so sick. literally makes me ill to see people talking about trading like it's easy. It's disgusting. Seriously, fuck that. Trading is anything but easy. Definitely fun, but that's assuming you love challenge. If you don't love being challenged, this will not be fun at all. It'll just be hard. But I fucking love challenge. How about you? Yeah, everyone would be doing it if it were easy. Exactly, Kevin. Yeah. Yeah, grandma. Grandma would be over there clicking buttons like the slot machine. Right? Just winning piles of cash. As if. Yeah, that's right. People just show you their wins. They don't show you their losses. You know? Like this silly man that came into the trade room earlier. Right? Saying like, do you even trade, bro? Silly guy. Silly guy. Okay, so another thing to note. I actually meant to note this earlier. Gaps. You guys know about gaps? So check this out. How can you tell how strong a trend is once the gaps get tested? Okay, so we start with the trading range. A couple pieces here, okay? Let's break these down. Piece number one, trading range. Why? Because I'm going from the bottom of here to the top of here. Trading range means you went up, you went down, right? And then you went back up, okay? So here's your trading range. Yeah, exactly, Alex. You get it. You understand. That's the rub. That's what happened. It killed my confidence. I had to work with Jared Tendler, the guy who wrote The Mental Game of Trading, for like a year to actually recover my confidence. It's fucking awful. Anyways, so we've got a trading range here, right? And then what happened? We broke out of the trading range. We got a breakout to the upside, and we got this beautiful bull trend here, right? Okay. So what'll happen is the market will come back and test that breakout point at some point. So what we can do is we can put a line here, right? Put a line here. Right? And then we can see what happens when the price comes back down to test the area where the breakout occurred. The breakout occurred here, right? Now watch what happened. This candle came back down to test that breakout point, and the test failed. So now what we have is a gap. Okay, so that's what I want to point out to you guys. Check this out. We can make a gap between the high 2 and the low of 26. You see that? Okay. So that shows you that the trend has been confirmed, right? That shows you that the trend has been confirmed, which is what makes this a good entry beyond just the fact that it was the first touch of the EMA since the open. Okay, so you've got multiple factors working in your favor here. A gap is one of the best indicators of trend continuation, because now you have confirmation, you have bullishness, and then you have a question. Now the probability is in question because we're going sideways. The more we go sideways, the more bears get more bear bars on the chart, and the more consecutive bear bars there are, and the more there's bigger bear bars on the chart, the lower the probability goes for the bulls, and the flatter we get back to 50-50. So that's what happens in a trading range, right? But then as soon as we went back to test this gap, as soon as we went back to test this breakout point rather, the gap stayed open, right? You're either gonna close that gap or the gap's gonna stay open. If we close the gap, now we have a sign of trading range price action, ending the bull trend. If the gap stays open and we bounce, then the trend is back on. Does that make sense? Is that clear to everyone? all-time highs. Breaking above. 2 minutes on the candle. Price just wants to go higher. So be it. Bull's getting the breakout. Minute 30 on the candle. Let's see what happens here. Bull's losing steam. We'll see. See what happens. I think you probably can, dude. But I would not trade on Robinhood. You got to get your ass a real platform, like TradingView. Robinhood's for amateurs, man. Nothing wrong with it, but it just, that's not the tools that the professionals use. Why not use the tools that professionals use? See if they got the close above. Yeah, they did. Yeah, I hear you, Kevin. But you need a platform that's, you know, robust and, I mean, it's a good idea to have good tools. So let's see what happens with this line. Gee. Okay, so we've been on for almost 2.5 hours. That's my time, guys. Thank you for being here. I appreciate you. We'll be back tomorrow at 7 a.m. And if you're new, check the links in the description. You can see the tools that I use there, the ones that I recommend. Have an amazing rest of your day, guys. Thank you so much for being here. This would be nothing without you. So I appreciate you. Thank you. We'll see you tomorrow.